Welcome to Investing in Peer-to-Peer Lending, a beginner's guide. In this video, we will explore the world of peer-to-peer lending and how it can be a lucrative investment option for beginners. Peer-to-peer lending, also known as P2P lending, is a relatively new concept that has gained popularity in recent years. It is a form of lending that connects borrowers directly with investors, cutting out traditional financial institutions like banks. In this segment, we will discuss the basics of P2P lending and how it works. Peer-to-peer lending platforms act as intermediaries between borrowers and investors. These platforms provide a marketplace where borrowers can apply for loans and investors can fund those loans. The platform charges a fee for its services, which is usually a percentage of the loan amount. The borrower pays interest on the loan, and the investor receives a return on their investment. P2P lending offers several advantages over traditional lending. For borrowers, it can be a faster and more convenient way to get a loan. They can apply for a loan online and receive the funds within a few days. For investors, P2P lending can offer higher returns than traditional investments like savings accounts or bonds. However, it is important to note that P2P lending is not without risks. In the next segment, we will discuss the risks and rewards of P2P lending in more detail. In summary, P2P lending is a form of lending that connects borrowers directly with investors, cutting out traditional financial institutions. P2P lending platforms act as intermediaries and charge a fee for their services. P2P lending offers several advantages over traditional lending, but it is not without risks. In the next segment, we will discuss the risks and rewards of P2P lending in more detail. In this segment, we will discuss the risks and rewards of P2P lending. As with any investment, there are risks involved, and it is important to understand them before investing your money. One of the biggest risks of P2P lending is the possibility of default. Borrowers may not be able to repay their loans, which can result in a loss of investment for the investor. P2P lending platforms typically have measures in place to mitigate this risk, such as credit checks and diversification of loans. However, it is important to remember that there is no guarantee that all loans will be repaid. Another risk of P2P lending is the lack of liquidity. Unlike stocks or bonds, P2P loans cannot be easily sold on a secondary market. This means that investors may not be able to access the funds until the loan is repaid. Some P2P lending platforms have secondary markets where investors can sell their loans, but these markets may not be very liquid. Despite these risks, P2P lending can offer attractive returns for investors. The returns on P2P loans can be higher than traditional investments like savings accounts or bonds. However, it is important to remember that higher returns come with higher risks. In summary, P2P lending has risks and rewards like any investment. The biggest risk is the possibility of default, and there is also a lack of liquidity. However, P2P lending can offer attractive returns for investors. In the next segment, we will discuss how to get started with P2P lending. In this segment, we will discuss how to get started with P2P lending. The first step is to choose the P2P lending platform. There are several platforms to choose from, each with its own lending criteria, fees, and loan types. Once you have chosen a platform, you will need to create an account and complete the registration process. This may involve providing personal and financial information, as well as verifying your identity. After you have completed the registration process, you can start browsing available loans and selecting the ones you want to invest in. Most P2P lending platforms offer a range of loan types, such as personal loans, business loans, and real estate loans. You can choose the loans that best fit your investment goals and risk tolerance. When investing in P2P loans, it is important to diversify your portfolio. This means investing in multiple loans across different loan types and risk levels. Diversification can help mitigate the risk of default and improve your overall returns. It is also important to do your due diligence before investing in a loan. This may involve reviewing the borrower's credit history, income, and other financial information. Some P2P lending platforms provide this information to investors, while others require investors to do their own research. In summary, getting started with P2P lending involves choosing a platform, creating an account, and selecting loans to invest in. It is important to diversify your portfolio and do your due diligence before investing in a loan. In the next segment, we will discuss some tips for successful P2P lending. In this segment, we will discuss some tips for successful P2P lending. These tips can help you maximize your returns and minimize your risks. The first tip is to start small. When you are new to P2P lending, it is a good idea to start with a small investment and gradually increase your investment as you become more comfortable with the platform and the risks involved. The second tip is to diversify your portfolio. As we mentioned earlier, diversification can help mitigate the risk of default and improve your overall returns. Invest in multiple loans across different loan types and risk levels. The third tip is to do your due diligence. Before investing in a loan, review the borrower's credit history, income, and other financial information. Some P2P lending platforms provide this information to investors, while others require investors to do their own research. The fourth tip is to reinvest your earnings. When you receive payments from your P2P loans, reinvest them in new loans. This can help you compound your returns and grow your portfolio over time. The fifth and final tip is to be patient. P2P lending is a long-term investment, and it may take time to see significant returns. Don't get discouraged if your returns are not as high as you expected in the short term. In summary, some tips for successful P2P lending include starting small, diversifying your portfolio, doing your due diligence, reinvesting your earnings, and being patient. In the final segment, we will recap what we have learned and provide some additional resources for those interested in P2P lending. In this final segment, we will recap what we have learned and provide some additional resources for those interested in P2P lending. Peer-to-peer lending is a form of lending that connects borrowers directly with investors, cutting out traditional financial institutions. P2P lending platforms act as intermediaries and charge a fee for their services. P2P lending offers several advantages over traditional lending, but it is not without risks. The risks of P2P lending include the possibility of default and lack of liquidity. However, P2P lending can offer attractive returns for investors. To get started with P2P lending, choose a platform, create an account, and select loans to invest in. It is important to diversify your portfolio and do your due diligence before investing in a loan. Some tips for successful P2P lending include starting small, diversifying your portfolio, doing your due diligence, reinvesting your earnings, and being patient. If you are interested in learning more about P2P lending, there are several resources available. You can visit the websites of P2P lending platforms to learn more about their services and loan types. You can also read articles and books about P2P lending, attend webinars and conferences, and join online communities of P2P lending investors. In conclusion, P2P lending can be a lucrative investment option for beginners. By understanding the risks and rewards of P2P lending, doing your due diligence, and following some tips for success, you can make informed investment decisions and grow your portfolio over time.